Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Becoming a Treasurer series, special host Meredith Zonsius has a timely conversation with Craig Jeffery about the vital component of the Treasurer's responsibility over payment security. They kick off the discussion with an explanation of payment security and cover various elements, including the role of the Treasurer across different types of security platforms, payment processes, security training, system audits, banking frameworks, and more. Listen in as they explore successful methods to help equip the new Treasurer on their ongoing journey. Welcome to the show, Craig.
Thanks, Meredith.
So you've talked about security as part of the Becoming a Treasurer series and separately in the Treasury Update podcast. So I know this is a topic near to your heart. Can you start us off with an explanation of responsibilities over payment security as a component of the Becoming a Treasurer?
Why is Treasury responsible for payment security, but not necessarily responsible for all security is a good question, because there can be some debates. And for those that are listening who may be treasurers, who may be becoming treasurers, say, no, that's an IT responsibility. That's data security. That's the chief information security officer's role. It's not Treasury's job or not the role of the treasurer. I would encourage you to listen through to the explanation and discussion so that it's calibrated and not, it's not binary on or off, and you understand where we're coming from. So Treasury has responsibility and is looked to protect the organization's most liquid assets. That's not the whole balance sheet, but it's certainly planning for the balance sheet, and it's certainly protecting cash, investments, ensuring stability of principal if there's investments, ensuring that the organization's cash is protected through payments, receipt, while it's in the banking system. And so this certainly includes payment security, because payment security is where payments, move out of banking systems or platforms to other, third parties through bank systems directly to vendors or investors. And this is a very exposed area nowadays, considering the level of threat that exists there. So, we see payment security sitting within the context of cash management and treasury management activities, and within how we manage bank accounts, the domain of bank account management, how it flows through that process. There is an intersection in the cash accounts of the general ledger, and there is an aspect of it flows through business systems, technology systems, and platforms of a company. Still sits within the primary business flow of cash management, bank account management. And the reason that we want to include this in the role and expectation is because it naturally fits there, and that is what the board expects. And a mature treasurer, mature treasury people understand the role and expectation of protecting assets. But there's too many, it's not a majority, but there's too many in treasury, in areas of finance where they take a more passive role on some of the key elements of the security. Maybe I'm not responsible for all security. Therefore, it's AP's job, it's IT's responsibility. I have no concern outside of perhaps treasury payments or treasury funds flow. The issue can be you take on too much responsibility and think you're in charge of all security elements, from facility security to the perimeter, the firewall, every single aspect of security. And so you try to take on too much, it's not in your domain. And so that overreach fails. And then the other side of that, the ditch on the other side of the road, is that you can say, well, I'm not responsible for that, therefore I'm responsible for a lot less than I truly am. And this is that abdication of responsibility to protect payments, to be responsible for payment security. And the reason this is so important is a couple of factors, and you've heard me say them over and over again. It's not just dear to my heart. I'm a bit of I talk about it too much probably. It has to do with the sophistication and automation of the criminals who are trying to get data and information, but also value out of your organization directly or through the sale or encryption of data that exists. So if they can move money out directly, that's a premier way of doing it. There's an intersection with value for all types of fraud here. And what have been the results of this increased sophistication, automation, organization, and persistence of the criminals? It's been more dire than sometimes we think. The loss levels are significantly higher, their payouts are greater, and that feeds that engine. They can continue to leverage and use more automation. They can reach more entities, smaller and smaller organizations who may not have some of the defenses that larger ones have. So everyone's at risk. Loss levels are higher. It's impacting more people, and the frequency of the attacks are greater. And the final thing here, I know I kind of launched off into this, but part of the reason for the importance is there's these external issues, which I just talked about briefly, but there's also internal issues. So the external issues are, even ransomware has, the average loss level has gone up over tenfold. It used to be about an average of $10,000 for a loss with ransomware, payouts for it, to over $110,000 first quarter of 2020. So that's just one example of increased loss levels. And we see business email compromise well north of $100,000 on average. Loss levels, you see system level fraud that have extracted multiple millions of dollars from different organizations. So that's on the external front. But there's also this idea of payment security and banking security has the internal issues too. And we've seen them over the last, let's just say the last 2 decades, from Parmalat, Satyam, and then Wirecard in 2020. Some key issues there where there was fraud, it was not detected, massive impact on companies, investors, and really Treasury's role to protect payment security, payments and cash is foremost. And that sits with the treasurer. It does sit with the treasurer. There's other elements that have to be done, but ultimate responsibility lies with the treasurer.
Craig, would you say that this is also very important as well with people working remotely more nowadays?
There's certainly additional challenges that come up. So since there's a change in process because people are remote, you might need to put in some other compensating controls. So signatures, that might have been done physically and handed off to someone face-to-face are now attached to emails. And so some people have to quickly adapt and put some kind of a security signing process in place, like Right Signature or DocuSign or one of those other methods to accommodate we're remote now, and therefore there's certain conversations and exchanges that can be spoofed.
So Treasury isn't responsible for all security. Who do you see as responsible for which types of security? This isn't consistent across all organizations, is it?
No, Treasury isn't directly responsible for all types of security. Physical entry to the building that may or may not be part of a reporting structure into Treasury, may be part of facility and grounds, who knows where that goes to. Treasury isn't responsible for the firewall, maintaining particular network security, or some of those other different methods. But when we look at what people do, there's certain things we would say should be standards, and then there's the answer to the question, this isn't consistent across organizations, is it? And I would say no, it's not as consistent as we think it should be. But let me just talk about a couple of those areas. So there's the exterior, the interior, systems, processes, the human element, or where people are involved in the process, and the banking security framework. So those are, that's a number of areas to look at. So, if we take that idea that the treasurer or treasury is the superintendent of payment security, they first have to have a strong awareness. They must know what's going on. at a reasonable level and informed across each of these areas. They don't have to be data security people, network security people, data protection. They don't have to do all of those activities and be responsible directly for all of them. But they need to be aware of what's going on to make sure that the environment where payments and cash are managed and secured, or supposed to be secured, is conducive to that. And so it's fair to ask questions to make sure that things are done. The superintendent doesn't have to drive the bus, clean the bathrooms, teach all the classes, do everything. Everyone has a role to play, but we would see them as being the superintendent.
Anything else to cover on processes or the human element before we move on to systems and banking security framework?
Yeah, I've got a number of things on the processes and the human element to talk about. I even jotted a few points down. So on the payment processes don't only exist in Treasury. They may be through multiple groups of AP. They may be in shared service center. There's going to be payroll, other areas as well. So one of the things when we say Treasury is responsible for them is you may not be responsible for every element, but it is well within the Treasurer's purview to have a full inventory of payment flows. These are going to go through and be resolved through banking systems and platforms that are governed by agreements that the Treasurer is responsible for. And you're responsible for making sure that that's secure. And so this includes controls, understanding what exposures exist, any compensating controls that need to be put in place. This is going to grow more important. And for those who, you might say, this seems a little extreme. The difference between extreme and negligent seems to be about a year in the payment security front, just as we see the increase of some of these attacks and different levels. Maybe it's 2 years, but what seems like, hey, you're paranoid, to that's a minimum standard, seems to be going quickly because of this threat level. And so when we think about payment processes, think about what's being done in a couple domains of, let's say payment rails. So card suffered a ton of losses. And so PCI, the payment card, the PCI, DSS, the data security standards set up for the payment card industry, established here are the requirements that you have. Requirements for your endpoints, your system, your training, the attestations that you have to do. They had to protect the payment network, and therefore they worked on the endpoints. And so that's been going on for over a decade. You look back 3 or 4 years now, SWIFT Customer Security Program, or the SWIFT CSP, recognized that some of their customers were being compromised, and then the compromise sent messages through their network, that certainly appear legitimate because the endpoint was compromised. And so they created this program that says, here's what you have to do based on your architecture for systems, access, reporting, tracking. And it was a self-attestation program, which included training, which included looking at the endpoints. And what's happened is that one is advanced. There's also a requirement for a third-party review. So it's no longer just self-attestation. And so these payment networks are seeing that. Your insurance policies are requiring more and more standards to be put in place. And your banks will require more and more over time. So when we look at the payment processes, we should look at the payment processes. We need to look at controls, exposures. How do you put compensating controls in place? And you need to have that full inventory. Anything less than that is not acceptable. And if that's not true today, if it's still considered acceptable, that's not going to be acceptable in the very near future. And you can see it. It progressed through card. It's progressed through SWIFT messages, which, is both banks and corporations can participate. And it's going to move to the other payment rails. And there are other examples of that. So that's processes. Yeah, so let me turn my attention to the human element. This is people, instead of hardware or software, this is the human element. If I'm trying to compromise a system for payment security, I'm going to go to the weakest link. It might be hardware, it might be physical entry to a building, it could be software where there's no security set up, or it's easy to compromise or trick or spoof the software, but the human element or people need to be updated and trained as well. And sometimes they are the weakest link. There's a whole set of attack methods that rely on humans compromising things. So business email compromise, CEO fraud, all rely on spoofing people, either to not only click on emails, but to respond to voice messages, to respond to information that makes them believe they've got valid instructions. Like systems, people need to be upgraded as well with new information, training, and that testing element of training is far more valuable than testing alone. And it's important to understand the distinction between, IT-related security training and payment security training. The distinction between don't open emails, keep your desk clear. If you open this type of message or go to the site, you could compromise your system and therefore grant someone the ability to gain a foothold and then move laterally. Well, that's good for a system perspective, and that's necessary. But we also have to make sure that we understand that the staff involved in payments, any part of the payments, understands the attack methods. What's going on? How are they compromising companies? How are they breaking down defenses? What principles aren't being employed when there's a case study of where that happens? What's an example of how that has occurred? And making sure that when we think about security principles, everyone knows they're a defender. And part of that is, understanding of what's going on, how criminals are combining things. The idea of ransomware is encrypting data, not giving it back and encrypting the backups, but it also is they exfiltrate information and they'll share it to create additional damage. And so that's one of the ways they've been able to increase the yield and payout. So just understanding how these things come together is really different just from IT training. The other part of that is, how can people be skeptical of payment requests to alert your senses? And I don't want to say spidey senses, because you should have some of that. Something doesn't seem right should always give you pause on any type of payment or activity, but you should also be much more skeptical because all of these ways that can happen. And so you should be alert. You should be able to recognize those things directly, so you're not relying on, did something seem off in that message I got? So that's an element there.
Is there anything else to cover before we move on to systems and banking security framework?
Not too much. I mean, I could talk about a lot of that for a while, but one of them has to do with, systems. When you look at the systems that support payments, it could be bank portals, treasury management systems, FX platforms, ERPs, AP systems, admin systems. Those systems involved in payments need to be part of your audit and review. And I did say your audit and review. Maybe you don't want to call it formally an audit, but Treasury should be reviewing those to see what is protected and where you have exposures as a company. And part of that is that mindset I talked about, being skeptical, thinking like a smart criminal. And what I mean by that is not just, look at it briefly, say, hey, the file moves here, it's transferred to another system quickly. Hey, it looks like we're good. Nobody could catch a file in 5 seconds and alter it. We're good. Not realizing that you might need to think like a very smart criminal to say, each of these is a layer. How do I defeat that layer? Well, there's only 5 seconds to catch this file if I have access to this ID or this set of IDs. How do I expand the time? Well, there's a scheduler. If I can pause the scheduler, I'm not limited to 5 seconds to break that down. So if I gain control of this layer, the scheduler, now I have access to the file. So I've defeated a layer of security. And I hate actually saying these things. Hopefully only Treasury people are listening to those. But the idea is, if you're thinking about it, if you can think about it by applying your mind to it, and then you can protect it, you're going to be far better off, because there are a lot of smart criminals who look at how can I remove layers of security. So, what's directly exposed, one step, and then second, what layer of security, if defeated, will give me keys to the vault. And if there's a couple that are easy to defeat, I can, people might be overconfident, and then I can go ahead. And then I think you were asking me about banking security.
Yes, could you share a little bit about the banking security framework?
I'm going to say a number of separate items here that all come under that category of, how do I look at a framework for protecting my banking? And here are some of the components there. So framework is above policy, for example. So how do I set up the controls in a control framework in a way that's going to protect payments, protect cash, detect those things, support what we're trying to do? So one would be the design of your bank account structure. How will our design allow us to detect problems immediately? Recognizing that one of the security principles, speed matters, can be supported by my bank account structure. So whether you have header accounts and disbursement and collection accounts in Europe, or you use the hourglass framework of collection accounts feeding into a concentration account, and then funding disbursement accounts, you have special purpose accounts that would detect other types of activity. It supports good accounting controls, but also good cash flow management, and can alert you to anomalies more readily. More readily is very important from a speed concern. If there's a problem, you can detect it earlier and stop it or prevent more from occurring. Secondly, there's account and transaction level controls. When you have accounts designed for a certain activity, you can layer in more controls and filters and blocks to prevent that activity. Protect everything at the account level, transaction level controls like electronic pre-authorization, disbursement controls even on checks across the board. I mean, this is the concept of your bank is talking to you about these different security features and trying to sell you on them, and they cost very little. But your banks are your friends. They do not want to see you suffer a loss. And so they provide these services which help protect you, which helps them too. And that's essential. So when your banks talk about security items, listen carefully. Don't just think they're trying to sell us something else. They're trying to sell you things that protect you for good reason. Third, when you think about bank security framework, this idea of I don't want to depend fully on one layer because a layer can be compromised. And an example is I don't want to depend just on the bank, an account level control or transaction level control, because what if that layer is compromised? A layer that I have internally, maybe my regular reporting or segregation of duties or a pre-authorization. If someone compromises one part of that, what is that going to do? It can leave you exposed. So that skepticism or extra care, the belt and suspenders model oftentimes will protect you greatly because others have no suspenders or belt, or maybe they have one and they're not paying attention to it. The fourth area has to do with visibility. I've spoken about this before. If you have bank accounts, you recognize that they're a point of exposure and a point of cost, and you need to have visibility to them. You want those reconciled, hopefully on a daily basis, but certainly looked at and reviewed regularly, because you can picture yourself getting the board, sees that there's some loss, and they're asking you questions. How are you going to defend your position of not protecting each account or not having controls in place that are commercially reasonable and readily available? That's not a position you want to be in. And so you may find yourself, I'm getting told no repeatedly, in terms of putting those in place. But as a treasurer, you have to pursue these as a requirement of doing good business, or what we oftentimes call a standard of good corporate conduct. I have an account. I need to do this. And it's not a question of cost. It might be a question of cost if you say, how can I do this in the most cost-effective manner? But I need to do this. This is a standard. It's a cost of doing business. And then there's other things related to banking security framework that are a little more involved. But this may include looking at a payment hub if you're a rather complex mid-sized company. And certainly for most larger organizations, larger in terms of revenue. These simplify many of the points of attack and provide a whole range of additional compensating controls, extra checkpoints that are quite helpful. That's at least a start on the banking security framework. without making that an entire Becoming a Treasurer podcast.
Yeah, that's very helpful information. What are some things that can be done? Perhaps you can stage them by effort?
So by level of effort, when you think about assessments, there's two types. One is, benchmarking your security practices and plans. Have that compared. Like we run a benchmark assessment where people can identify, here's what they do, here's their plans, what their experience is across security and payment security. And then you can be compared to organizations, of similar complexity or the industry at large. And you can see where are you compared to others and get guidance on what are others doing, but also what you can do. A more involved element of that is an assessment, and that's, building that inventory of payment flows, issues, exposure types. And that can be done on your own, and that can be done with a third party to help go through that and have that a rigorous look where someone else is coming alongside you. So there's do it on your own or using a third party. Shoring up the human element, this would be on the less effort side, would be making sure you have payment and treasury security training that has testing. And again, I said payment and treasury security training, that's geared towards issues related to payment fraud, treasury issues, making sure that it looks at everything from the treasury security framework, a banking security framework. What are the different types of attacks that take place? And this is usually something separate from what the corporate training will look like for security about, don't use thumb drives. Here's what phishing emails are, how not to do them. So it would go beyond that significantly and focus on the training. The fourth, and I'll just give 5 to try to be not long, not quite brief either, but would be a treasury audit. And this is an audit done by Treasury where you're looking at things like bank accounts, services, signers, and permissions. So bank accounts would be, you're looking at what's on the general ledger. You're looking at what's being reported from your banks. You're communicating with your banks to make sure you don't have hidden accounts. You look at services. Are they compliant with your policy and your plans? So do I have account level controls on these types of accounts? Am I confirming that I do or not? And you would look at things like services, signers and permissions on portals. We oftentimes leave way too many doors open. We leave accounts open. We send letters to cancel accounts. They don't get closed because some funds were left in the account and they need to be acted on. And then finally, a roadmap is needed, whether you have an assessment or a benchmark or you do your audit. All those things feed into your remediation plan or your roadmap to better security. So that roadmap identifies and holds yourself and your team accountable for making progress every 6 weeks or every quarter. And this has to be refreshed. You have to continue to refresh this on a regular basis because the threat level increases, the attack methods and attack vectors change and get more sophisticated. So it's a mentality that it's an ongoing journey, not a single destination. So that means maybe I benchmark every year, every 2 years. Maybe I do an assessment every 2 years, every 3 years to make sure that I'm keeping up with everything that came in from outside the organization, all the changes that take place, new methods of defense, and the new attack vectors that come on. So benchmarking, assessments, security training for treasury and payments, treasury audit, and a roadmap to better security would be five things that you could and should do.
Excellent summary. Thanks, Craig. It's been great speaking with you and learning more about payment security and tapping into your wealth of knowledge once again. I look forward to speaking with you next time as we continue the Becoming a Treasurer series.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.